On today's Hot Sheet, I'm discussing market reactions to last night's election results, how those results could impact mortgage rates this week, Trump's housing policy goals, and mortgage applications for the past week. Today is Wednesday, November 6, 2024. I am Byron Lazine, and the Hot Sheet starts now. Good morning. Welcome into today's Hot Sheet, the day after a election, obviously. Let me know in the live chat which market you are tuning in from. Let me know in the live chat over under for you 5 hours of sleep. We'll know who went to bed early, wasn't worried about anything, and we'll know who was kind of staying up and watching every little bit of the drama unfold last night. Obviously, at this point, you would already know Trump has been elected the next U.S. president, the 47th president, capping off a historic comeback, obviously. Electoral votes right now at 277 to 224. The Senate has flipped up to red as well, and Congress, the House rather, is still up for grabs as we move through today. So maybe a surprise that there is actually some certainty here today. Pretty clear, decisive victory as it's all shaking out. Maybe even a popular vote victory for the former president and now future president Trump as we move into the inauguration in January. So what we're going to do here is obviously break it down on what it means for housing, what it means for the economy, and what it means for the markets. We're not going to get into any of the political stuff, but we do want to see, how does this look for housing? We talked about yesterday the fact that no matter who got in, and by the way, you can always go get the replays here on YouTube. Make sure you're subscribed to the channel here at BAM. We hope we're bringing you valuable information each and every single day at BAM, but you can get the replays on Apple and Spotify. So like yesterday, we talked about the fact that, the majority of previous elections, home sales go up. Okay. That was yesterday, regardless of who got in. Okay. If votes weren't tallied today, or if Vice President Harris got in, obviously it wasn't Harris, it was Trump. Regardless of whatever way it went, the facts remain that the population in our country wants certainty. They want to move forward knowing what's going to take place, and that certainty has translated into 9 out of 11, I think it was. I'll get you the exact. These charts are inside of BAMX, so BAMX members, you can go grab those. Maybe you're in a deep blue state. I'm sitting in one of those deep blue states here in my Connecticut studio, right? And you want to put some of the, worries that maybe a consumer has. Oh my God, oh man, my candidate didn't get in, or whatever the case may be. And, I don't know. I don't know what's going to happen to the market. Well, what happens to the market in the past after an election? This is according to KCM, using HUD and NAR as, I'm sorry about the blue there. I don't know what happened. HUD and NAR as their sources. Home sales, total sales, go up in 9 of the last 11 presidential elections. Okay. The last two misses were 80 and 88, where they went down. Okay. And we're coming off of a year, obviously, and we talked about this yesterday. Again, you can get the replay, Apple, Spotify. Leave us a review there too if you're listening over there to the replay. I know so many of you guys catch up with it after the fact. But when you look back and look at this year in particular, where we're at the lowest existing home sales since 1995, there's only one way to go up, to move, and that would be up. And I think that's basically probably a certainty as we look forward. The market right now feeling very certain, obviously, about things. The Dow has soared to a 1,300 point setting, 1,300 point here on the open up. That sets a record for the Dow. Okay. you're seeing that the markets are responding very favorably to the certainty of knowing who the president is going to be. Obviously, the markets, Wall Street, already had a 60-40 projection that it would have been former President Trump uh, getting back into the White House as the 47th. And so they were 60, Wall Street was 60% confident in um, this decisive victory happening. And you could see that in the market, even leading up yesterday. And then the after hours just continued to ramp up. Hopefully, you bought some Tesla for yourselves a couple weeks ago. There's a big pop there. But the markets like this, okay? Markets are rallying, and we won't get into the world leader stuff. I don't think that really is going to be helpful for our housing market here. But this decisive victory over Vice President Harris, winning these battleground states, the markets have surged with Trump winning, and with now his party gaining control of the Senate. There's possibly going to be a House having control as well. So there's going to have all three. Parts of government, in the Trump corner there. So it'll be pretty easy to get through certain policies. We're going to talk about Trump housing policies. What could impact a housing market? Remember, we've been in a real estate recession for 2+ years. For any agents who have been, just starting out, maybe the 3 years in, 2 years in, spring 2025, and this is no matter who got in. Again, I think the certainty of being on the other side of this thing, having inflation trending hopefully in the right direction. I think spring 2025, if you're in the business 2.5, 3 years, this is going to feel, like no other time period. Those of us that have been in the business, a couple decades, decade and a half, whatever, you felt periods of time where the spring market it feels normal or it feels above normal. Spring 2025 is going to have that feeling, with the certainty now that is setting into the market. You see it first in the stock market, this reaction, now Dow going to a record. You're going to see it when we get on the other side of the holidays, with housing. Think about how many young people went out and voted for this candidate last night in comparison to 4 years ago. And we've gone over it here at length on the hot sheet over this past year. What's young people's concern? It's the economy. It's, will I be able to buy a home someday? Will I ever be able to afford a home someday? That was a critical component to how people voted. Now, it doesn't mean that the next 4 years are going to work out or anything like that. I'm not making predictions. I'm just saying, based on what happened last night, you had a resurgence from young voters that certainly for a Republican candidate, they've maybe never seen in support of their candidate. And the number one reason for that was the economy and the ability to actually buy a home for their family. European stocks, just looking at other market reactions, are also higher. So global economy having a waking up and having a rosier outlook on the markets. Okay, so a strong America in the markets is good for the overall markets across the board. I want to take a look at, before we get into some of the mortgage rate stuff and some of the Trump housing policy stuff. I just want to take a look at Logan Motoshami's timeline here on Twitter. Friend of the Knowledge Brokers pod, friend of BAM, obviously Logan Motoshami over at Housing Wire. He talks about, hey, those early 1980s, okay? You think about the 80s, the Reagan years, you think about a booming economy. Well, the early 1980s, there was worse affordability, according to Motoshami, than today. Maybe hard to believe. Okay. So he was reacting to a question: how does the housing market move forward? Meaning, hey, either this is actually, I think, a fair question. How does the housing market move forward? Okay, the affordability has gotten so bad right now. You need incomes to come up 60%, houses to come down 30%, or rates to come down to 2% from where we're at, being up over 7%. And Logan's making the case, hey, affordability was worse in the 80s, and look what happened. In the early 80s, shortly after that, you had an absolute boom. We also had more inventory and a recession back then. Rates went lower, okay, which is something that there's many projections for in 2025, that rates are going to move lower. We're going to get to rates here this week. I don't think you're going to see that this week. And I do have some concerns, as I've had all year, about rates. I cautioned people back in January, don't call it the year of the fives, and I wouldn't call next year the year of the fives on interest rates. So I'm not getting ahead of myself on rates, but I think overall the next couple of years, you do expect rates to move lower. And Logan says, hey, rates went lower, wages grew, and household formation happened, and then demand rose in time. We know we already have the pent up demand. Okay, the demand is there. This economy now having a feeling of certainty, you can see it in the stock markets. This economy having a certainty about it, that is going to unlock and unleash a lot of movement in the housing market. Okay, we're talking about 3.84 million existing home sales, the worst since 1995. That number will be dramatically different in 2025. And for agents, especially those of you 3 years and less, you're going to feel something different that you've never felt before when you get into the spring of 2025. This is not a political statement. This is just the reality of how markets react. Again, going back to the chart I just showed, it's inside of BAMX. BAMX members, you can download that. You can use code HOT to get into BAMX today. But the chart that shows there's only been 2 out of the last 11 preceding years after an election where home sales went down. 9 of 11, they go up. You're going to see more fluidity in the market. You're going to see a better confidence in the market. That this would have been the same statement, by the way, had Harris gotten in. I think you might have maybe a little bit more headwind, just generally speaking, with how people feel about the economy. If you looked at the exit polls last night, okay, if you actually watched any of the stuff from last night, even if you were watching mainstream media, they couldn't avoid the data that was smacking them in the face on these exit polls. That exit poll after exit poll after exit poll, Americans were disapproving the last 4 years. They were fed up with the economy. Remember, a lot of the economy has to do with consumer confidence. How confident are you in the economy that you're operating in? How confident are you to go and take that next step into home ownership? How confident are you that the inflation is heading in the right direction and that rates are over time going to head in the right direction? Jerome Powell, big day for you, buddy. Jerome Powell has the FOMC meeting today, and guess what? We know who the president's going to be. By the way, Trump appointed Powell. There's some that believe Powell may have a limited time, but just keep in mind, Trump did appoint Powell. Maybe Powell's here to stay. But Powell and the boys and girls over at the FOMC, they meet today. They finish meeting tomorrow. Press conference time for Jerome tomorrow afternoon, Thursday, already knowing who the president's going to be. He stays out of, he does a good job, I would give him that, of staying out of politics. And I'll be looking for in that transcript. We'll be looking here at BAM. We'll be picking apart as we always do. We'll give you that transcript inside of BAMX. I'll be looking at what he thinks about housing. I'll be looking at what he thinks about the long-term rate. Does he stay out of politics? I think he will stay out of politics. That's been his MO, but we're going to hear from him tomorrow. Right now we've got we've got basically a certainty that he's going to come out, and tomorrow, this is the indications he's given into the market. A flip would be a little bit crazy. But right now we have a certainty that there is going to be a 4.5 to 4.75 range, meaning a 25 point cut. The current target on the Fed interest rate is 4.75 to 5. 99.2% chance that Jerome is going to go, and the FOMC committee is the committee rather is going to go down a quarter point. 99.2%. Okay, not as the Trump win was not as decisive as this. This is very, very decisive. Okay, even though he had a decisive win last night, 99.2% is a guarantee. Now, for the first time in weeks, we're actually seeing this is a sliver of hope that it's a half a point. Okay, a 0.8%. I don't think the FOMC goes a half a point. I guess, hey, maybe Jerome says, hey, we go a half a point and try to throw the Trump presidency some red meat here, maybe to save his spot. I don't know. I think that would be far-fetched. The signal to the market is a quarter point. The market's expecting a quarter point. It's a 99% certainty that it goes quarter point. We expect Powell to come out tomorrow afternoon, say quarter point. Now, last time we went half a point, what happened? Interest rates, they went up. We had some job data that, by the way, has been revised down since. The market's reacting to what I would say is probably not accurate job data. And we saw those rates go up. So you could see rates move up again after the quarter point. We just don't know. We'll see what happens there, obviously, into Friday as they do and make that announcement. Going back to Logan here, this will get us into what's going on with rates right now. Okay. Here's a chart that shows widespread use of variable mortgage rates and high debt burdens make some housing markets more vulnerable to rising rates. Okay. Look at where the U.S. is, way less vulnerable. Okay. So we don't have widespread use of these variable mortgage rates. So when people are talking about, oh my gosh, these, higher rates, I just heard it on the All In podcast, talking about, oh man, these people with variable rates are going to get killed. We don't have widespread use of variable rates. So we're on the extreme side of being less vulnerable. That being said, okay, you may see rates go up here in the short term. Now, listen, the Trump presidency gets inaugurated on January 20th of 2025. Okay. You don't have an election and then, policies get put in today, and they don't get put in necessarily, maybe some executive orders on January 20th. There are things that there is a transition. There's all that kind of stuff that obviously takes place. And I'm not even saying that a Trump presidency is the headwind needed to push rates down. They believe that right now in the short term, how the markets are reacting. You saw what the stock market did. There's confidence in the stock market right now. It's shooting up. That might mean other asset prices shoot up. Might mean housing goes up. Okay, buyers might want to buy during the winter when you get a 12-month cycle of the lowest price opportunity. And here's Realtor.com putting out a headline just giving some caution of what's going on this particular week. Mortgage rates set to rise right now as Trump has now clinched the election win. Okay, so the defeat over Harris, the Associated Press showed those projections. We looked at those. Now the bond markets have quickly responded. Okay, the 10-year rose from 4.43 up from 4.3 before the first polls closed on Tuesday. Now we know, everybody following the hot sheet knows what that means. Okay, when bond markets move up that much, and right now we're sitting here just in real time at a 4.47. We might hit 4.5 on the 10-year. Look at this here on the chart. It's just moving up and to the right on the 10-year. We know when that happens that the 30-year, the long-term rate follows. Okay, and so I do expect today the 30-year fixed rate to go up. Okay, there's a couple theories here. Okay, one of the reasons for that is look at what's going on in the stock market. The Wall Street obviously believes and has confidence in what's going on right now. There could be a boom to the economy. If there's a boom to the economy and we don't have inflation under control, then inflation could pick back up, right? And we know when inflation goes up, what happens to rates. Okay, so there's that. Also, and this was true with both candidates. Okay, how much are they going to grow the deficit? Okay, Trump is he wants to lower taxes. I mean, kind of a fan of lower taxes, but putting that aside, um, if we lower taxes too much, there's some economists and analysts that say, hey, you lower taxes too much, that could increase inflation. So there's some concerns about inflation that have that 10-year going up, and going back to the taxes, there's concerns that you could grow. I don't think there's concern. I think there's all but certainty, and this was whether Harris or Trump got in, that this deficit is growing. Now, Trump said last night in his speech there, and you can see him here giving that talk with now be the first lady for the second time, to his left, our right. In that speech, Trump mentioned that we're going to pay down the debt. Now, if you've been following the last couple of days, for me, it's all about paying down that debt. That is a critical component to the long-term health of this country. But the markets don't really buy into that. Okay, how are you going to pay down the debt? It's probably not going to happen in year one, especially. Listen, let's face the facts. If the Republicans get the House here and they control all three sectors of government, they're going to want to go do some things that have been on their agenda. To do things in government, it costs money, and so you might raise some of that debt. Market doesn't like debt going up, and that's why you're seeing the 10-year going up. Remember, the bonds, the U.S. bonds have been not desirable all year. Why? Because we're ratcheted up that money printing machine. 3-4 years ago, during the beginning of the Biden administration, that extra $2.3 trillion really kicked off inflation, and people just don't want to hold our debt. The more our debt grows, the more we have to borrow just to pay interest, the less desirable holding our bonds is. And that's been pushing up the 10-year. And so that's what's happening here today. Okay. It's like, okay, what's going to happen with how crazy is this debt and deficit going to go? Okay. So Realtor.com makes the case that although Trump has vowed somehow to lower mortgage rates if elected, the prospect of his election victory has been driving mortgage rates higher in recent weeks. After touching a 2-year low in mid-September, mortgage rates have risen for 5 consecutive weeks, hitting 6.72. Now, that is also driven by that ridiculous job report, which we know the job market is not nearly as strong. It's already been revised down. Comments from high-profile bond investors indicate that they're fearful of a red sweep, which is what is now looking likely. The red sweep means all three sectors of government, the White House and all of Congress, both the Senate and the House, could result in higher government deficits. So just what I said there, this is one of those theories that's out there, and this is according to Mortgage News Daily. In the early hours of Wednesday morning, Trump gave that speech that I mentioned. He was talking about, everybody's going to be happy. We're proud, blah, 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 blah. Where do we get to the point? He's talking about his family. There's a point in here that here we go. If Republicans deliver on Trump's vows to impose blanket tariffs and conduct a massive deportation operation while extending tax cuts, the government's deficit could balloon. So that's what Realtor's saying. But he said last night that he's looking at, obviously, reducing that deficit. That remains to be seen, and that's where some of the caution is coming with the markets here today. And you're going to see that the 30-year go up likely here today in a significant way. Mark Zandi says, obviously, chief economist there with Zandi. This is on October 29th. So a tweet here, just kind of foreshadowing what could happen when rates hit 7%. It was flirting with 6% just a few weeks before that. The mortgage rate is up despite the Fed's decision to cut. We talked about, hey, the Fed, the 30-year could go back up even though the Fed's going to cut again tomorrow. What he says is the strong economy is even stronger than anticipated. So Zandi is saying what we just lived through the last couple of years was a strong economy and stronger than anticipated. I have questions about those job numbers. They've been revised down. That's a side note. But now he's saying investors are rethinking how quickly the Fed will cut rates. They're going to cut a quarter tomorrow. It's a 99% chance. Equally important is investors' rising expectations that former Trump will win re-election. Obviously, now that those betting markets were right. Anybody bet on that in the poly market? Anybody win some money last night? That was a crazy deal, huh? I guess there was billions of dollars bet, which is just unbelievable to think about. Investors are taking Trump at his word and believe that that he will go with higher tariffs, deportations, and deficit finance tax cut in full employment economy, which means higher inflation and more government borrowing. So the markets believe that if he's going to, fulfill his promises, move forward with his plan, that more government borrowing. By the way, if Harris got in and she was going to get her plan through, it would have meant more government borrowing. I'm not really about government borrowing. Maybe they have a plan with this Elon, Doge. What is he calling it? The Department of Government Efficiency. Maybe he's going to go in and do what he did to, Twitter, and maybe that's how they're going to balance it out. Get some of the fat out of government. Hey, by the way, real estate agents, let me know in the chat if maybe whether you voted Trump or not, you've got a little smile pointed at the DOJ today. Hey, maybe we get a less aggressive DOJ, not just for the real estate industry, but for all of business. A DOJ that's attacked business throughout the last 4 years, and maybe I guess maybe I'll leave it at that with the DOJ, but maybe not a bad thing. All right, let's get into this article here on nowbam.com, and then we're going to get to what's going on with mortgage applications. Interesting move this week on mortgage applications after we had a couple of really good weeks. Posted on nowbam.com. You've got some of these housing policies. Okay, so here are the housing policies. Number one, increasing housing supply through federal lands. Now, I'm skeptical of this plan in a big way. Okay, so I like the idea of it. I do. I like if we've got land that is just not being used right now, okay, then why not go and reimagine American cities? Why not go and maybe unleash a guy like Elon, who's pretty, whether you like the guy or not, he's pretty creative on innovation. He's somebody that probably is the best innovator of our time. You get landing those rockets and everything that he does like that. He might be able to figure out how to engineer a new age city, and maybe you could do that on federal land. Okay. But here's why I'm skeptical of just the federal land plan. Here's the percent of land owned by the federal government. Okay. It's all west. So right now, if you're an agent out west, by the way, you're up early, and thank you for that. Hit the thumbs up. But you've got a lot of this land out west. You got 45% of land in California owned by the federal government. Okay, that would be an interesting battle between Governor Newsom and President Trump. Hey, we're going to come in here and build some new cities on the land that we own in your state. All right, you got 80% in Nevada. You got 39% in Arizona. Okay, you got 61% in Alaska, but I don't think you're going to have a real huge inbound migration there. All the federal land is owned out west. So could that be if you went and built on the West Coast, some of the, some of this inventory as part of this Trump plan, that'd be good for the West Coast. Maybe it's not going to free up the inventory issue, which is in the Northeast, which, by the way, the Northeast has the lowest inventory across the country. Okay. You also, according to the Trump plan, they're going to reduce regulations. Now, you can point to this and say, hey, if you look back from 16 to 20, they certainly cut up a lot of red tape and reduced regulations. So this is something more than the housing supply through federal lands that I can buy into and say, hey, there might be there's a pretty good chance that there will be regulation cuts. Like my comment with the DOJ getting off of the back of businesses across America, that's going to be one of them. And other, so housing construction, maybe zoning restrictions, but you get local there. So I don't think the federal government's going to have much move on zoning restrictions. Environmental restrictions, maybe some ways they can, but helping out developers with just cutting back on the overall restrictions that they have, and making it easier to build. Now, one of the things that they've also mentioned, which isn't in here, which is kind of not a housing plan. I'll get to the other ones in a second, but that now Vice President-elect Vance has talked about a lot is, and Trump said it last night in his speech, whether you like it or not, they're going to drill, they're going to take oil that as a resource we have in this country, as opposed to buying it from other countries. That's something, that this administration is passionate about doing. And when you do that, you lower the cost of energy, which when you think about that, if you follow where their, thoughts are on this, and it was something that in the beginning of that Trump administration was working. When you lower the cost of energy, you lower the cost of transportation, you lower the cost of goods and materials. Okay. And that can have an impact on obviously builders and just really the overall economy, which can help bring those prices down. Immigration policies. Listen, I've been a critic of this. I don't think immigration is really driving up housing prices. Obviously, this administration would disagree with that. Supporting first-time home buyers. Trump's campaign mentions plans to provide targeted support to first-time home buyers, but we have limited specifics on that. Okay, this could be tax credits for down payments. It could be relaxed lending terms for first-time home buyers. I'd be wary of that. We're in a good place right now with, I feel like, the lending, but there's some mention of first-time homebuyer relief. And then here's the big one: if he can pull this off, which it doesn't look like it's going to happen this week, he's not. They're not in yet. But those mortgage rates, you get those rates moving in the right direction, coupled with confidence in the economy, and then you really start to take off on what could be a significant meaningful spring market in 2025. Okay, and we were headed in a really kind of an unprecedented situation here the last 5 weeks, as we saw mortgage applications year over year increasing. Right now for this week, the headline is mortgage applications decreased 10.8% from 1 week earlier. Okay, so rates now up over 7%. And then obviously being an election week, people probably distracted. You got 10.8% on the overall number. The refinance index decreased 19% from the previous week. And the purchase index now only down 5%. So purchases down 5%. That's the big number we look at. That's the one in bold, 5% on purchases. Now, what I said was the big movement we've had the last 5 weeks, we get again. Even though we go down 11% week over week, that's a seasonal number too. It's not just the election. It's the fact that it's November. People are gearing up for their holiday. People are gearing up for the end of the year. There's going to be less home buyers right now. And look at this now. I think it's the 6th consecutive week that we're 2% higher than the same week 1 year ago. In fact, I'll bring up the chart. Those of you guys that are BAMX members, this chart is available inside of BAMX for the Monday hot sheet link. So remember, every day we're uploading all of the charts that we use, all the data, all the hot sheet show notes. Hey, thank you to the BAM team. Every single day we get these hot sheet show notes that we can use inside of our communications to our database, our text messages. You can go ahead and grab those right inside of BAMX. It's your access to the fastest changing information, 24-hour cycle related to your housing market. You can go grab that stuff and use it in your communications. It's invaluable. I know so many of you guys are using it. But look at this data according to Altos Research and Housing Wire. We've got You could call this week here in September kind of dead even. Then you got 1, 2, 3, 4, 5, 6, now 7 weeks that are year over year positive on mortgage application growth. So the headline number of mortgage applications are down 11% week over week. Yeah, I expect it to move down right now this time of year, but we're 2% higher than where we were last year. Okay, that pent up demand is starting to pop its head up, and with the confidence that this stock market is showing, and that the belief in this economy is expected to show, this is gearing up for a spring 2025. Unlike anything we've seen here over the last couple of springs in terms of just demand, activity, and interest. Yesterday, we did see a 7.04 on the 30-year fixed. And again, just to show that we do expect that to move up with this 10-year moving up. You can't have the stock market, booming like it did and get everything that, today that you'd want, meaning, a stock market on fire and then all of a sudden a 10-year, dropping. You've got a Dow right now that's up 1,200 points, and S&P that is up 1.67%, NASDAQ up almost 2%. So these are big numbers. Dow set a new record today after the obvious announcement with the President Trump going to be the 47th president. Today at 3 p.m. Eastern time, I will be doing a BAMX office hours. Another reason to grab your spot in BAMX right now. We have office hours with Zudilio. I've got the CEO of Zudilio with me to break down the platform that every single BAMX member has access to as of just a couple of weeks ago. We're already seeing massive deal flow inside of Zudilio. Help your clients get more listings with Zudilio and compete with iBuyers, getting 4 instant offers on any listing that you have. If you're in one of those iBuyer markets, this tool is outstanding. Every BAMX member gets Zudilio as part of your BAMX package. Just an extra perk as we keep loading value into this BAMX platform. We're going to do an office hours to answer questions and get some more education on Zudilio. Thanks to Zudilio for helping so many BAMX members. Zudilio said to me, "Hey, we just want to be a part of what's going on with this BAM movement, and we want to give back to your community." I mean, BAMX right now, and you get 10% off using code HOT. It's $59 a month. When you see all the courses, the done for you content delivered every single Friday, the hot sheet show notes every single day, the charts uploads, these office hours, the community, all these different things. You're like, all that for 50 at the courses every month for 59. It's unbelievable. It's a crazy deal. Well, guess what? The Zudilio platform's over $100 a month, and you just get it included on the BAM X price of 59. That's how much Zudilio believes in this community, in BAM, that they want to be a part of it, that they just said, I said, hey, it's got to work for everybody in BAM. We got to have a good deal. They gave the best deal I've ever seen anybody in this industry give to BAMX members. That's how they feel about this community. So 3:30 Eastern, office hours for BAMX members. Use code HOT in the link down below if you're not a BAMX member, so you can join us today. That's a live office hours. I'll be there with the CEO. So we're going to obviously have a lot of fun there. Hope everybody has a great day here. And remember, listen, the good news for your customers and for your clients is what we talked about yesterday. This market is going to start moving again. That was regardless of whoever got in. Okay. The market's going to start moving again, and home prices likely to go up. They've gone up in 7 of the 8 last years after elections. So if I'm a buyer, I'm thinking about buying probably this winter before those prices go up too much. All right. That's your hot sheet here for today. We'll be back here tomorrow live, 9:30 on the East, 6:30 on the West. You know the deal in between. Thank you, and we'll see you soon. Until then, toodaloo.